Hey, good morning. Let's go over today's trade plan. So today is rollover and the zones are for the ES June contract. In the overnight session, we were using the equivalent of 76.75 to 78.75 as support, and buyers continued to defend that area. And then we got a upside breakout type move so far off the ECB announcement. So at this point, heading into the open, the question is whether the other markets can now catch up to the S&P, because so far ES has been leading on the way up, and we've seen a pretty fast directional move right back to the previous swing high at 98 quarter, and then we had a naked VPOC at 99.75. So the question is whether buyers can continue to be active from these aggressive prices, and whether the other markets can now start to catch up to the S&P. So if we start seeing weakness in the other markets off the open, then that would be a red flag, and it could limit the upside in ES as well. But as long as the other markets are holding up well, and we know that ES is already the strong one, and it continues to hold above 92.5 to 94.5, which is the most aggressive area of support, then we can balance up here and then put in another upside breakout. Now, initial resistance, the 0.2.5 to 0.5 area, is right above the current short-term range. So that zone does call for caution. It marks the open gap at 0.2.5 and the current RTH session high for the year at 2005. So it is a larger time frame area of resistance. It is a significant level, but if all the other markets are also breaking higher and catching up, and ES has had a chance to balance and really rest and now breaks out again, then the zone does not have to shut off the buying and it doesn't have to cap the upside. So we could from there go on to 0.8 quarter. Now 0.8 quarter and beyond, the responsive sellers can be active, and it would be riskier for new buyers to initiate long positions at 0.8 quarter and beyond. So as you push into these upper areas of resistance, ES gets short-term exhausted and overbought. And if the other markets are testing their recent highs, as ES is testing initial resistance or the 0.8 quarter naked VPOC or one of these resistance areas above, then that can set up a situation where we actually get a short-term rejection and possibly even a short-term reversal off of one of these areas of resistance. So, as the market pushes higher, the risk reward starts to become questionable for new buyers entering the market. So that can limit, the upside at 0.8 quarter and beyond. So it calls for caution. On the downside, 92.5 to 94.5 is the aggressive area of support, and holding above it would be a signal that the buyers are in firm control. A break below 92.5 to 94.5 would just be a signal of just a little bit of lack of strength, not necessarily a all-out reversal. That's something we'll have to gauge in real time, and depending on how the market is pulling back, whether it's doing it on a lot of downside momentum, whether the other markets are cracking lower and completely failing, then we'll need to reassess. But as long as it's just kind of a normal pullback, the buy side can still be active at 86 quarter to 88 quarter, and as long as we're still holding the 86 quarter 88 quarter area, it means the overnight breakout is still intact. If you fail at initial support, that means the overnight breakout could be failing, and then we can test yesterday's high at 82.5 and then go right back down into the 77.5 to 80.5 zone, where responsive buyers can still be active, because in that case, the market would still be trading in a sideways balance after a pretty decent larger time frame balance breakout from several days ago. So it doesn't mean that it has to completely reverse and crash lower. As it goes down, the buy side can still step in, and it can be a pretty stable or gradual move, even if it is going to go down. So, heading into the open, we know that overall the buyers have been more dominant. But at the same time, the market's a bit exhausted here, and it's testing larger time frame resistance. So, that is a reason to be a little more conservative than with today being rollover. We can see a little bit more choppiness at times. So that's another reason to be selective and careful today. So even though the buyers are dominant short term, you have to balance that out with the fact that ES is testing bigger resistance, and the other markets still have, catching up to do. They haven't actually broken out from their recent highs, and they're still within their recent balance. So if you start seeing weakness there, then that can be a red flag. And then we'll still be trading in a balance, trading in a range. The 77.5 to 80.5 area is really important on the downside. Break below that would be a confirmation of short-term weakness, and then we can even go down and test the zone below 71.5, 73.5, even 66.75 to 68.75, and that would be the next significant area of support. And in the event of a break below that, then the next big one is 55 to 58. But ideally, you want to see the market holding above yesterday's high, above initial support, and if this is really going to be a strong market, then even pre-market support is a zone that has potential to hold, but it's the most aggressive area of support. So those are really the main thoughts heading into the open. Let's just see how the market reacts to pre-market support, initial support. That's really going to help set the tone for the day. If those areas don't hold, then again, we could get a little bit more back and fill and balancing. 77.5 to 80.5 is the strong area of support right now, and a failure over there would change the short-term strength that we're seeing in this market. So those are the main ideas. Let's see if the buy side can maintain control here in the S&P, which has been leading higher, and we'll take it from there.